Good afternoon, traders. This is Christian Farmer, it's Tribeca Trade Group, and this is your end of day market recap for Tuesday, March 12th. Coming to you from beautiful, sunny, almost 70-degree weather in New York City today. Really nice day. So I will keep the video kind of short so that you can get outside if you're around the tri-state area and can enjoy the weather, which is beautiful today. So we got the CPI report out of the way today. That was, I think kind of as always, like holding up the market a little bit from major decision making. And I kind of thought about this a few different ways today in terms of what we got. So number one, I think this is kind of the most important thing, is that the number came in line with expectations, right? We always talk about that with earnings reports as well as economic reports, that basically it's what the street is expecting. Now, I don't know why they've been expecting such a hot number, bigger than what the Fed is trying to basically price in terms of getting to the point of interest rate cuts. Clearly, I don't think that they could do any sort of cutting when you're looking at 0.4, and when you analyze that, of course, you're looking at 4.8% in annual rate. Now, I don't know, of course, we're just taking the current month and extrapolating out 12 months. But remember, the previous month was 0.3 for month over month. So, even if it's 0.3, that's still 3.6%, which is way higher than the Fed is looking for. Um, so I think, so number one, so the number comes out in line with expectations, and the market seems to, for now, embrace that. I think that the market has kind of gotten to the point where we've heard the Fed speakers and Powell speak and basically, say that they're really not hinting at any more interest rate hikes. But I don't think we're really going to get too many interest rate cuts either, unless something, unless the trend changes and we start to see inflation readings at 0.0 or 0.1. So, we've got a lot of time until that happens, but it just seems like we're in this now period where the rates will probably stay the same. And you could see they are still pricing in a 63% chance for June, right? But there's no chance of an interest rate cut next week or hike, it looks like. And 14.5% chance for the May meeting, which is not obviously a high percentage. So we'll find out when Powell speaks. That's going to be on the 20th, and for now they're in a quiet period. So that's what we have on deck, and that was the main event for the day, and the market basically took it in stride. The other thing too that is, I mentioned, I thought about this a few different ways today. It's an election year, so they don't want to upset the apple cart, and really probably want to be doing too much, right? And we know fiscally, which I talked about in some of yesterday's videos, that right the administration and the fiscally, they are still running high deficits and doing some stimulus right now. So that's also, you kind of have to take the two together. Monetary policy and fiscal policy, right? That's the whole game, not just monetary policy. All right, so let's Coinbase slips on one, but there's a debt offering for Coinbase. I did not see that. Let's just hit the tape. So let's go over it. So enough about economics. Let's talk a little bit about the price action. First thing that stands out here is that the VIX went down 9% today. Again, that's usually the case when VIX volatility usually rises into an event, and then once the event becomes known, it's like the cat's out of the bag, and the volatility drops pretty decently. So we're all the way back below a 14 again in the VIX. The VIX rose yesterday. Even pre-market, the VIX was rising. And again, that's just going into an event. Reminder that we had a 10-year bond auction today. We're going to have a 30-year bond auction tomorrow. TLT, you did see rates go up today, right? Which I could probably put this in red too at this point, because that's a decent move for TLT, which was down 0.8 of a percentage point. The dollar didn't really move too much, just to kind of cover the macro. And by the way, risk disclaimer in front of you, everything that we're going through and these videos are for information purposes only, not giving out any advice or recommendations. the Qs led today, right? So, in yesterday's video, we talked about how that maybe there was some pre-positioning going on for Friday's index rebalancing, right? And then sometimes that doesn't necessarily carry all throughout the week. They usually do a little bit of that, and then once everybody's positioned the right way, then they kind of unwind some of that pre-positioning and on Friday's close. All right, so today it was more of a what we've been seeing or what we saw last year where Qs really led up 1.4%. Also, notice the a little bit of underperformance, not as bad as it was in the middle of the day, but the small caps don't like when TLT goes lower like that, meaning when interest rates go higher, right? So small caps have been more sensitive, right? And that's a pretty drastic underperformance from the Qs, about 1.5% difference from what the Qs did today. Oracle really kind of helped the tech and software group, but overall, it's just one of those things where, there's a difference between, looking at doing your market research, right? And going over through observations and looking at things objectively. What you don't want to do, in my opinion, is keep on looking until you find something that you don't like, right? And I just see a lot of that. I from time to time I'll go through Twitter and just to see, because Twitter or X is a great gauge of sentiment and to kind of get a feel for what's going on. Like yesterday, I saw stock market crash was trending, so one day you have a very bullish cover from Barron's, which I get it. That's also used for sentiment purposes, and then the next day you see the stock market crash is trending on X. The other thing too is, yeah, I just see too many people, like they're just trying to look for something that is going to cause looking at so many of these charts where you're charting one thing in the numerator and ratio charts, one thing in the numerator, one thing in the denominator. People are really I think read too much into those, because people forget, right? When you're charting that way, like when you're doing a ratio chart where you've got one thing in the numerator, one thing in the denominator, right? It's basically, you could have both of those things could be going up, right? But one could be going up a little bit slower than the other, right? Also, both could be going down, right? So some people look at these and they always think that one thing is going up and one thing is going down, right? That's not the only outcome with these things. So I'll use ratio charts a little bit to kind of identify some relationships, but certainly just watch the price action of what you're trading, right? Or what you're trying to analyze. That's the best thing, right? And the Qs, while yeah, it's been flirting with that 20-day moving average, right? We talked about yesterday how it broke into the value area for the month. But I mentioned that the 20-day moving average was right there, and I didn't want to short something when you have one of these moving averages right around. So this is not back at new highs, but it's not breaking down either. So sometimes you just have to be patient, right? And wait for it, right? Don't want to always be the first to try, the goal is not to come out with the first to say, to come up with a different prediction every day. It's to basically wait for something that's going to tell you that you actually have evidence in front of you that something is either breaking down or breaking up, right? And of course, everyone wants to look for hints of when those things are going to happen, but you don't have to make a big decision, or it's okay some days just to say, hey, I don't know. Let's see how it's going to play out. There's not enough of that on Twitter, right? And it's okay not to like the price action every single day, right? But the one thing we don't want to be making these rash decisions, like just because we don't break out one day, that doesn't mean that things are falling apart either. All right, so that's the Qs, and I might as well show the 1 hour chart here too, right? And that's also where I find hints. And the one thing that I noticed yesterday is we did not break down yesterday. We got to the bottom of value. We actually broke a little bit below it, and we got right back in. So this 80, it's green here for the for the MarketWebs, right, indicating that for using this volume at price here is that 445.36 is your resistance, and the 80% rule, bullish 80% rule, is not complete yet. Now the S&P, yes, this looks a little bit different, right? So when we look at, let's start with the daily chart again. And, we've talked about how we get to the upside of this channel. I mean, and so the Qs, I get it. You could say that they haven't been acting as strong as the S&P. The S&P has been showing some relative outperformance, but you're going to like, what do you like? What do you dislike about this, right? What are you going to short? You're going to short thinking that this channel is going to break. Eventually it will probably break the channel, but, the best thing is just sometimes to stay the course when you don't have a sell signal. So, again, we get, I perk up or I get closer to the edge of my chair when we're at a support level, but we didn't break it, and looking at this yesterday too, we got to the bottom of the value area and we held it. Nice green bar here, and we've cruised through the value area for the week, and we're right back to where we were on Friday. It's very close to the highs on Friday, right? So those are the two big things. I spent some time. I thought we might see a bigger move from the diamonds. I thought that rotation might carry. The diamonds did okay today, but they did not, they're a bit slower moving, but again, there's nothing wrong with this chart either here in the diamonds. I think that looks fine. And, found support here, nice looking candle yesterday, not at new highs, but, I just thought that there might be a little bit more of a conservative type group that the market might like this week with quadruple witching and some of the other events, but it was fine. Let's talk about this big name here, NVIDIA. I even put on a trade. I put on an iron condor trade. I had to defend it a little bit and buy some stock because my thought was that NVIDIA might just consolidate this week, but the market thought otherwise. And we're actually through. And you can see it's doing the old rally in the after hours again. So it's up to 920, right? So like I said, I bought some stock once we got to, I'm in an iron condor where I sold the put spread and I sold the call spread. So, how you manage these things is as the price gets to around like your strike in either end, either side, you can buy stock, or you can, if it gets to the lower end of the range, sell stock, right? And then this way it's designed to make money where you will lose on the spread, right? And then the other side of the spread, I sold a put spread, that should go to zero, so you'll earn the full premium of that, but you have to defend. And the nice thing about that is the short call spread I have is capped at the most risk. If NVIDIA keeps going up, I'll have that long stock to offset it. But really, really nice here. And it's basically back above the 5-period moving average, right? So we've talked about this too. Like, I say a lot of times in that one day is not a trend, right? And even with this ugly reversal, we didn't really break trend, at all. Even though yesterday we did, to some extent, we got below the 5-period moving average, but this is one day below the 5-period moving average and right back into this, above there. So SMCI, of course, too. I did not look at this one really too much today, but back above the 5-period moving average as well. Let's talk about a few other names that I thought were interesting today. And let's see if I can bring up my watch list. Yeah, so here's our watch list for the week. So I added Microsoft today, right in the beginning of the day today. But this is another one too that I think if you look at Microsoft, right, this to me is not a bearish looking chart at this point, right? This is pretty smooth. And if you look at the past here, so try to get back to some of this other data here. But you could see that we've had multiple times where Microsoft has gone sideways, right? And it resolves itself higher. So it kind of looks a bit similar, right? Where, I could draw another trend line in here to be fancy just for illustration purposes, but, kind of the same thing, right? So let's see if Microsoft wants to take that next leg higher, right? Because look at it. It has been going sideways and has not made a new high since the beginning of February. So it's done the digestion thing. Let's see if it wants to kick higher. And I like this. I do like the setup. So put this out later. So that's a name that I'll definitely be watching tomorrow. Also, best performer that I saw, out of my watch list anyway, was Gap. This had strong earnings and is elevating higher here. 24.73 is one level to watch, and there's also some VPOCs over here, 23.59. So we'll have to get through some overhead supply, but now for now it's kind of cruising up to them. All right, a few other names too. I really like, I just tweeted this one out a little while ago, but this is one of these strong earnings names, right? So we compile all these, all the data. I've got a watch list that I continuously add to with strong earnings names, and like Oracle will go on the list. But look at Pubmatic today, right? Notice that it had an earnings gap, right? A little bit of digestion. Look at the volume compress a little bit with this, light pullback, and then bam, look at the volume today, and this looks like it wants more. That's a really strong, that's a really nice looking volume move, right? So again, remember they had earnings like about 2 weeks ago, and very strong earnings at that too. A few other names to look at too. Mentioned that Oracle really helped the software space. ServiceNow had a good day, right? Turned the corner, got above that trend line. Watch what happens there at 793.41. I traded CrowdStrike today, right? I was looking at this name. Remember we saw a big call buyer yesterday in this, and I was like, let me see if it can get back above these two short-term moving averages, just for confirmation purposes. So it still has to get through 333. Kind of stopped right at the top of value, similar to ServiceNow, but I already took a couple targets in it, so I'm okay with holding the balance. A few other names too, VRT. Remember, this is a name that saw some call buying on Friday and then got rejected back into the 20-day moving average. Nice bounce. I would watch for continuation in that one as well. ELF, also a nice little kick off that 20-day moving average, right? Notice how well right now, knock on wood, some of these growth names, once they do get to the 20-day moving average, how nice they're acting. So that's something too. Builder was one I had a position from last week. I added to it yesterday. I took this trade off. I was just exercising a little bit of risk management, especially when I saw interest rates go higher. I don't need to be in a couple of housing plays. So I did get out of this one, and but it held that top of value quite nicely and got back to the 5-period moving average. So I'll still keep tabs on this one. Now to talk about something a little bit different, right? Well, let me just go through a couple other areas too. But I also like healthcare here, right? Again, slower mover, and I like to have a couple slower movers. Even though I have a couple slower movers on. I added Visa today, right? I just really like this payment space. I talked about the payment space and went over about 4 or 5 names yesterday, so I won't rehash them all. But look how similar Visa looks to MasterCard, right? Very nice. Now to talk about what I think is what happened overnight, which was the Hang Seng got back above its 100-day moving average. So let's go through a couple China names. KWeb. All right. So if you've been listening to my videos, you know that I've been talking a lot about how there's overhead supply, right, in some of these areas. So KWeb is one of those where if we look at this weekly chart, we got into the value where, you could see it's been already taken out, which is the VPOC. It's just the right here. It's hard to see once they get taken out, but so it'll be interesting. So we're back at the 200-day moving average, and I have to say, if the price can stay above this 200-day moving average, it's done some of the heavy lifting so far. So that's the main thing: is can this stay above its 200-day moving average? Because now it is back into the value area for the year. That should trigger the bullish 80% rule. So I have to say that this is constructive now that we've done something here. FXI is going to have some more things to get through. Now, if you don't want the exposure, but you kind of like the idea, I would look at what the emerging market ETFs are doing, right? And I did get long some VWO today, right? There's a VPOC up there, but that's what this looks like on the daily and on the weekly chart. I like the trend that's happening here. Sideways, 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 and now trying to break higher. So if it can clear that daily VPOC, I like this. I like it a little bit better than EEM. Difference, by the way, between EEM and VWO is that it's a different fund manager. They're both emerging market funds, so there's going to be a different management fee. But also, there's one other small difference between these ETFs, and that's the fact that I think South Korea is not in the VWO. I'm sorry, is not in the EEM. So there's a small country difference there. All right. So I think that's kind of interesting. One name that I did add to my longer term portfolio, the TTG trend portfolio was CPNG. Right? Remember, this has been a Stan Druckenmiller holding for a while. Now, I never would buy something just because someone else owns it, even though I'm a big fan of Stan Druckenmiller. I do it when my system tells me to. Right? Notice that we're above this big gray box, which is the value area for the year. Also, notice how tight this is. All right, so I'm going to try this. Let's see if it gets out of the base that this thing has been in. Right. Another name too that's going to report earnings next week. No, I don't know what they're going to do for earnings, but I kind of like this chart. Right. So this is also a payment processor internationally, and is back above its value area. So again, it's kind of compressed here a little bit. But well, obviously, it could either A, run into the earnings report. So if you put the trade on now, right, you can maybe get a run into the earnings report. But if that doesn't happen, it's really going to end up, whether or not they have good earnings or not. But I do like the tight price action. All right, guys, that is it. We'll wrap up today's video. But most things, even though had a little bit of a dip or a small correction, for the most part, the trends are intact. One other thing too that you could find in our Substack every day, which is free. Now, of course, if you want to see my positions and my watch list and how I'm adding to names in the watch list, you'll have to pay for that. It's only $40 a month. But look at the difference. This is yesterday's note, right? And I talked about how that consume. But by the way, so look at what's happening here. This is SPX 4-week new highs versus new lows, and look at how how many more highs there are than new lows. This was yesterday. Now, some people are, one of the things that stood out to me was there's more consumer staples and more utilities. But my comment yesterday was that's okay if these things come up a little bit. It doesn't necessarily mean a trend change, right? Today, we've got 78 new highs and only 9 new lows, right? And it's multiple groups, right? So there are multiple areas, just like I went through. I don't go through all tech, right? I went through a lot of different areas, so again, this is it's tough to find something negative here, guys. I think what we're trying to find here, or what we're trying to monitor, is if something changes. We don't have anything really negative here, so I know it's not easy to stay the course, but it is what it is until we break a support level, or until something else that could come into play. But for now, um, trends look strong, and the dips are getting bought. All right, guys, have a great night. See you tomorrow.